Hi everyone. Buongiorno, buon pomeriggio. I hope you guys had the chance to have lunch and it's extremely well like we usually do here in Rome. It's my pleasure to be moderating and facilitating this panel called Outsider or Insider. Is crypto now part of the financial system? What do you guys think? In order to answer or try to answer that question, I would like to invite to the stage Ada Vaughn. Ada is the growth strategist at SDF. Thank you, Ada. I'd like to invite also Scott Beck, Chairman, United Texas Bank. Please, Scott. Thank you, Scott. And John Hansel, COO from Security. Thanks, John. So, first question I have for you is actually related to the development of the internet and the web. When in time do you think we are? Are we in 1992, before Netscape? Or are we in the 2000s, in the dot-com bubble? Or are we in 2007, maybe, when the iPhone was created? Where are we in terms of crypto if we compare that to the development of the internet and the web? What do you think? Maybe you, John.
Ronaldo, I guess to answer the question, we'll just do a quick little survey here. How many of you were born prior to 1980? Okay, woohoo, we've got some gray beards in the room. Okay, well, you probably remember the introduction of email, and that rolled out around 1990. And when you were corresponding, if you had a Prodigy account or maybe an America Online account, at that time you could only correspond with people who had the same email addresses as you. And it wasn't until 1994, when Simple Mail Transfer Protocol, SMTP, came along, that you now had interoperability across these different domains. If you look at where we are today, ledger technologies, the large absence of interoperability amongst these ledger ecosystems is very akin to where email was in the early 1990s. So interoperability is going to be a significant step forward for the industry itself. Now, also bear in mind, we also connected with modems in the 1990s. So if you ever had to do that, you downloaded email, you reviewed it, you uploaded email. It was not anywhere near as instantaneous as it is today. So broadband, Wi-Fi, and other advancements in infrastructure made that technology accessible and broadly used as a result of e-commerce and social media and other things spawned from it. So I think if we look at where we are today in the blockchain industry, the adoption of this technology by financial services providers and other applications, we're very much in the early 1990s world. Now, I think we'll accelerate faster than we did then because we know we've kind of been down the path, but we're definitely in the early 90s, in my opinion.
Interesting.
Yeah,
Scott.
I would agree. Or definitely early 1990s. But I don't think as early as 1992. I always kind of say, so I was one of the ones that just raised my hand. I'm 48, which puts me 1992 graduating from high school, but 1996. So I think it's like 4 years later. When graduating from college, you don't have an email yet, right? I think that where we're sitting today is from a connectivity perspective, we're still building out the railroad, right? We're still putting the pipes together, and what we're going to see as we move forward is how do those pipes interconnect with the traditional financial system? And so those are some of the things we're talking about related to on-ramps and off-ramps.
And Ada, do you agree with the timing of where we are right now?
Yeah, I think mid-1990s makes sense to me in terms of an era where there were still
maybe without good music, right?
Sorry.
Maybe without the good 90s music that we had back then. So,
yeah, right. I think there was significant friction still between systems. Sorry, I'm buzzing a little bit.
We have some noise somewhere.
I think there's some noise on my mic, but yeah, I think that what you're talking about with different protocols and different communications methods, email, there was still a significant amount of friction between systems, and I think we see that today across the landscape of blockchain and crypto, where interoperability is a major theme that I'm interested in. And actually, there's a panel on it tomorrow. So a shameless plug. Oh, it's all your fault. Nope. Sorry, technical difficulties. But yeah, I guess I would agree. I think it's interesting to compare blockchain and crypto to an internet that, changed all of our lives, right? Like, I don't know if the folks in this room, and we're kind of like, we all drink the Kool-Aid, right? Like, everyone in here is interested in blockchain and crypto in some kind of way at different levels. Will blockchain and crypto be as transformative a technology as the internet? I think that's pretty bold. I don't know if I'm willing to stake my claim on that, but I do think that transformation in financial services and in international financial services is possible.
That's good. Can you guys hear me? Yes. Okay. So, Scott, what do you think is the role of the financial system in this context, in these 90 times that we are? Is the financial system friends or a foe in regards to advancing this time frame?
So I think if you're talking about the financial system, we're talking about the traditional markets. So I run a bank out of Dallas, Texas, and I think what you're asking is related to regulation, right, in terms of friend or foe. So, in the United States, let's say there's at most a couple dozen banks that are willing to work with the crypto ecosystem, and that's probably for two reasons. One is because the entire market cap of the crypto ecosystem is only $1 trillion right now. So I think we're just talking about a size issue. So it's not even necessarily, let's say, that the Bank of America or JP Morgan or UBS or Banque Nationale de Paris or these other large financial institutions, they just don't care. Right? It's just too small. There may be too many issues. There might be, AML, money laundering issues that they don't want to have to deal with. They don't want to have to deal with the regulators. I think the regulators themselves haven't even figured out, in some cases, what is blockchain. So even though for the past several years we've been banking the crypto ecosystem, a lot of these regulators, just 2 years ago or a year and a half ago, you have to start with what is blockchain, right? So I think we're when you ask friend or foe, I think that's what you asked, right? I'm not, from a regulator perspective, I don't think they know yet. Certainly they've gone after some groups to try to make to try to advance the regulation. I'm not really a proponent for suing people to then figure out what the regulation should be, but that's they're using the stick approach, which I'm not a big proponent of. But certainly I'm hopeful that it's friend. I mean, I think the more financial institutions that want to participate in the ecosystem, the more that you'll have those dialogues between the banking industry and the regulators. And I know that you probably have. We were talking backstage about some of the things that Securrency is working on right now, related to that as well.
Yeah. So I'm not sure if this is coming from me or not, but the regulators, of course, obviously are a significant gatekeeper in the adoption of the technology in various applications, securities, payments, and a variety of others. We've been working for a long time to build interoperable compliance solutions to bridge legacy TradFi into DLT environments for a variety of asset types, in particular securities. So on that journey, we've had a lot of engagement with regulators, both in the United States and abroad, showcasing how the technology can be used to enable and facilitate the compliance with regulation in those respective jurisdictions. One of our very, very key partners, WisdomTree, it's an exchange-traded fund asset manager that operates out of the United States and Europe. They started a journey with us back in 2019, and most recently received approval from the SEC to issue 40 Act funds as digital securities on the Stellar Ledger and the Ethereum Ledger. So this is a multi-ledger solution authorized by the SEC for this asset manager to bring 40 Act funds into the market. So yes, the regulators play an incredibly important part in the approval process, but it's not an environment where you can't get to yes. So we're really, really happy for our partner in WisdomTree to be able to bring these funds to market direct to retail. This is really a unique development, whereas an asset manager, traditionally their products would be traded on an exchange, like the New York Stock Exchange or NASDAQ or London Stock Exchange, and be accessed by retail clients through a broker. But because we've now brought the asset into a digital environment and it has a self-governing compliance capability, it can go direct to retail. So it's really a unique application. You'll start to see the first introduction of that will be the WTSY token, which will be a short-term treasuries note fund, and many others that will follow. WisdomTree quickly followed up with another 8 or 10 applications with the SEC for other funds. So it's the industry is definitely moving in this direction and embracing the technology in a way that I think we're all very eager to see.
I think it's super interesting that both responses went straight to the regulatory question, right? Because as people who operate in the world of crypto, we instantly connect banks with regulation, because they all function in highly regulated environments and different regulated environments around the world. And I think that my answer to the question, are banks, are banking institutions friend or foe? I would say maybe like 60-40 foe, just because they are trying to protect their own interests, right? And until whether it's the industry or the proponents of the technology propose solutions that help their business, they're businesses, right? So they have a business interest, they have responsibilities to shareholders, they have all these things. And I think if we, as people, smart minds in the industry, are able to propose solutions that are symbiotic, that help the banks, that help the end user, that stay within regulation, I think there's an enormous opportunity to collaborate with financial institutions. But we have to put ourselves in their shoes as well. We can't just say we're here to disrupt, we're here to change the world, to change everything. Yes, of course we are. But we have to do it within the framework that exists.
And just to keep the floor with you, what do you think is the role of stablecoins in making crypto more mainstream? Do you think it's a sort of a business card, like a spearhead? What do you think the role is?
I think stablecoins are absolutely critical. I think well-regulated, well-governed stablecoins are really the linchpin to the adoption of blockchain, of tokenized assets. Yep. And I couldn't be more bullish on the future of really well-governed stablecoins, especially in emerging markets. We were talking in the speaker lounge beforehand, and I was kind of talking out, both sides and saying, the U.S. doesn't need a stable coin. Do we really need, Circle, do we really need a U.S. dollar stable coin in the U.S.? Do I need one personally? Do I need to go get that thing? And the question is, maybe not, but does someone in Argentina need it? Does someone in Colombia need it? Yeah, it's super useful, incredibly useful across borders. And so I think having a tokenized, safe representation of a U.S. dollar that can travel the world, super interesting, super helpful. The euro, they're all coming. And I know we just announced this thing with Wirex. I know stablecoins are really integral to their strategy as well.
Yeah, I'm glad you mentioned it. I'm from Brazil, and in Brazil there is one financial institution working with stablecoin. So the Brazilian central bank has an eye on it. So I think that's an interesting perspective. Scott, I would love to hear your take on stablecoins.
Well, we think that stablecoin is extremely important from an ecosystem perspective. From a banking point of view, we've been working for about 16 months with the federal regulators on actually developing a stablecoin on Stellar and kind of on round number 7. Back and forth with the regulators.
Hang in there.
So this has certainly been top of mind for us for quite some time, in terms of understanding the need for basically staying on chain, right? And that's really what it comes down to. But I think there's this tug of war, and I think that's certainly in the United States. Obviously, we're not in the United States today, but from a U.S. perspective, and I know the counterparts in Europe and Asia and other areas, certainly see China has just completely banned it, is what happens to the banking industry when this shift inevitably happens, right? Because the entire banking industry is set up on this concept of trust. Obviously, blockchain is the distributed trust, right? So if you don't need a central arbiter of trust, being the banks themselves, and that moves to the blockchain, then what are banks? What is the usefulness of banks, right? In terms of not acting, and so what our regulators have set up, and certainly the people that work in politics, right, are utilizing the banks to effectuate change within the government dynamics. So whether that's helping areas for community reinvestment by telling banks that a certain percentage of the dollars need to be lent into low to moderate income areas, or for example, during COVID, giving out loans in the United States for PPE, right? Those types of things become very difficult to do if you completely eliminate the banking system, unless you literally rework how things work from a governmental perspective. So I think these are the things that are actually more trying to be figured out within our governments around the world today. But certainly, I think we owe it to ourselves, and when I say we, I'm kind of wearing two hats, because I'm representing a bank, but I'm also been in the crypto mining business for the past 8.5 years personally. So I definitely kind of look at it through two different lenses. So there's certainly a need for stablecoin, and I think you can go to a different session if we want to hear more about stablecoin.
Great. John, just to follow up a little bit, when I think about the plumbing of the web, I remember, for instance, the issue of voice over IP in the 90s. When it came up, people were basically freaking out because the telcos were scared and no one knew what to do about it. And now voice over IP is just like part of the regular plumbing of any voice communication network, right? Do you think we are heading that way in terms of the plumbing and crypto?
Yeah, I definitely do. I think if you consider the way that people transact, and we talk about banking and a lot of the centralization that comes in that context, the world has a very strong pull signal, right, for DeFi today. They want decentralized activities. They want to be able to transact peer-to-peer. The technology that enables that is the blockchain environment, but you have to have a trust component. So as voice over IP became more mainstream, industry just absolutely flourished and blossomed as a result of the conveniences that it offered. When you look at what's happening today, as TradFi is now coming to truly realize the benefits of record-keeping functionality that blockchain offers and automation that blockchain offers. Both areas that are significant cost centers for banks. Now, we don't want to centralize to a solution. Instead, we actually want to have centralized command but decentralized execution. You want to have policies and procedures and governance that are there to protect the investor, protect the market participant, but that is in a decentralized context. So the enforcement, compliance, on-ramps, off-ramps, all those other things are at the edge. And as I think the technology becomes more trusted, more mainstream, more convenient, it's just going to be a very quick turning point over to the adoption.
Ada, from the perspective of SDF, what do you think?
Well, I think we talk a lot about kind of the highway on which value travels at SDF. The seller network being a more efficient way to move value, and so I think we do envision that. I think there's innovation coming that allows all the different highway systems, all the different blockchains to be integrated and interoperable with one another, and that's something that I'm tracking closely. There's a conversation tomorrow on interoperability and bridging, and I think VoIP worked and worked so well because the internet was already ubiquitous. Everyone had a connection to the same highway already. And I think that's what we need to see happening in blockchain and crypto is just more access, more and better access across chains.
Yeah.
But certainly from a, we talked about regulation, but we also have institutional. And so, drawing on the analogy that you were giving related to VoIP, right? What you had when VoIP came out, you had industry really pushing back, right? So the AT&Ts of the world, the British Telecoms of the world, they were pushing back because what they saw is the POTS lines versus the general lines being utilized evaporating, right? And so we're seeing the same thing, and that was obviously movement of the data packets as it related to video and voice, right? So now you talk about the railroads of money, right? I mean, now we're basically utilizing those same railroad tracks to move value, right? I mean, that's what this next evolution of utilizing blockchain allows us to do because of the trust, eliminating this trust intermediary. And so, but what came first was the regulation related to how large businesses got the politicians to put a framework in place so that they could still protect their own sandbox. And so I think that's effectively what's happening again, right? It's the banks basically, I don't know, for lack of a better word, colluding with the politicians to figure out how they're going to ultimately come up with an appropriate framework, right, to allow value to continue to transfer. And so I think that's the analogy maybe that you were trying to get at.
Yes, and another point in regards to the financial system is digital IDs, right? So what is the role of KYC or a proper digital ID, a tokenized ID? How do you think the importance of that is for this sector to go mainstream?
Well, I think if you want institutional adoption, you're going to have to comply with the regulations that those institutions are governed by. The efficiency with which you can perform individual identity verification, particularly know your business type checks and the ultimate beneficial owners behind those. The more efficient that process is, the more quickly the attributes of those market participants can be gathered. And attributes are essentially the key to unlock interoperable compliance solutions. So you have to have an institutional grade solution if you're going to have institutional adoption and institutional value move in. That bar is particularly high. It's very manpower intensive, it's expensive, and it's slow. And unfortunately, it's fraught with error. So where you can bring tools into the equation that allow these large institutions to more efficiently address identity and all of the compliance considerations ahead of a transaction, the more quickly that value will begin to move into the system to become a liquidity provider, whether it's through lending or direct participation. And we're not talking about insignificant amounts. Earlier we were referencing how much fiat globally is in the system. I think it was something like $40 trillion. Some of the larger institutional banks have $40+ trillion of security assets that they service on a daily basis as well. So massive amounts of value in the institutional realm, but it's not yet unlocked. It hasn't moved into a blockchain context yet. But there's no doubt it's going to happen. As I said before, record keeping and automation are the two things that any bank would want to have added tools in their toolkit to be able to leverage. And it's just a matter of verification, endorsement, and then fast followers are going to be, first movers are going to be followed by fast followers.
Do any of you guys want to jump in?
Sure. One of the most important things that we talk about on a continuous basis is to kind of differentiate the positives as it relates to blockchain and the positives of what the new technology allows us within the banking and financial system to do, specifically related to AML and KYC. And so as soon as the regulators recognize the fact, or as they continue to recognize the fact that we can better track, because it's not just about knowing your customer as you onboard them, it's the ability to continuously monitor what's going on within an ecosystem. And so when you're dealing with cash, right, the cash that's sitting in your pocket, as a bank, as a financial institution, once someone pulls that cash out of an ATM machine, We have no idea what they're doing with it, right? Nobody has any idea. So, I mean, there's privacy concerns related to what happens from a blockchain perspective, which it's a whole other conversation to talk about that. But the reality is it's actually 10 times more secure and 10 times more knowledge you have in terms of being able to see what's moving in and out of a wallet, even though that wallet, in theory, has no identity, right? Because the wallet ID, you can see every token moving in and out of the wallet. So it's really fascinating in terms of us. I mean, we've been now doing this for a few years in terms of onboarding new customers. The first thing we ask the customers are, well, tell us what wallets you're using, right? We can instantaneously, utilizing elliptic or chain analysis, right, tell you what type of movement is happening, going back and forth through your wallet. Well, that doesn't exist today in the banking system from a traditional perspective. When a new client comes in, says, we'd like to open up a new bank account with you, we don't have any idea what kind of movement is happening at the prior bank that they were at. So, the reality is that this technology that exists within blockchain in terms of knowing your customer, being able to monitor them, is actually pretty awesome. And so the adoption of this within the financial system over time should actually provide greater clarity as opposed to what we have today.
Ada, if we want to go mainstream, move from 92 to maybe 2007, what kinds of gates need to be opened in order to get there?
Yeah, that's a great question. From a standpoint of, I think of two main use cases, right? It depends on the use case, what's really needed. So the use case of what we've been talking about a lot, which is value movement, payments, transactions, cross-border transactions. I think still there's a usability barrier in terms of the wallets that are out there at the consumer level. So I still see that there is room for innovation in wallets and custody and the user experience. That's another area where we, in our industry, could learn from, banks' apps, things that people are used to using, and try to create, patterns of behavior and use cases at the consumer level that are just a lot easier, right? A lot more convenient. So I would say that at the consumer level. As far as like the business use case and getting some of these cross-border transactions to work, there's still a lot of regulatory, just like chatter and problems, for companies that are trying to stand up these services of, what licenses do they need and how do they interact with the businesses that are going to become their customers. And so I think in order to kind of turn on the faucet for cross-border transactions in the B2B space, there needs to be just, ongoing collaboration and the continual push. Like I've seen some amazing projects that are navigating this, that are, creating corridors and getting businesses connected in new ways and creating economic opportunity too, like in small business in the lending space. So there's a lot of innovation going on, but yeah, I think we still do have we're still pushing against trying to get that network effect to really get to broad scale use.
Sounds good. Any thoughts about this open-ended question, like what gates need to be open? John?
I think I'll just go back to it's the institutional adoption. It's the convenience with which traditional payment rails or finance rails can move into the DLT environment, reap the benefits of the efficiencies, the affordability, the transparency, the immutability of that environment, and where needed, move back into the legacy context. Because there's, I think we said $1 trillion worth of crypto value and $40 trillion of fiat value in the world. It's going to be a long time until it tips the other direction. So you have to have that interoperability to be able to facilitate those institutions' transition into a more efficient technology. It just takes time. No matter how big or small you are, it takes time to adopt new technology. And the processes, the procedures, the personnel, everything that's going to be needed for it to happen will take some time, but it will happen. Even
in those numbers, though, there's signs of life, right? I mean, like in terms of like the market cap, we're talking about the cash money supply worldwide of 40 trillion versus 1 trillion of crypto assets that are traveling around in the world. And I think that when you look at those numbers, okay, yeah, it's 1/40th, although, in the very recent past, it was probably 2.5 to 3 trillion. So we have seen, this kind of Bitcoin dominance effect. But one of the statistics that I track really closely is exactly Bitcoin dominance. And so like the growth of stablecoins, the growth of alternative assets beyond Bitcoin, is super exciting and definitely a sign that we are finding useful, purpose here.
So we're talking about kind of drinking our own Kool-Aid, right?
Yeah.
In terms of, obviously, everybody who's here understands a lot of the things that we're already talking about. So I'm going to make a pitch on the other side, which is we're all here, but probably the most important thing for kind of going mainstream is actually finding a politician or a regulator or someone that you can bring to a conference, right? Like that's what actually will change this industry. All too often, I'm having conversations with people, especially, I come from traditional finance, right? I used to work in New York on Wall Street for JP Morgan Chase, for Societe Generale, right? What the industry doesn't realize as a whole right now is that this is just like mainstream financial services now, right? There's derivatives market that exists, right? There's all of these things that are going on within our ecosystem, within the crypto ecosystem, that the general public doesn't understand, right? The general public that's out there thinks that we're playing with coins, right? We're like it's trading cards, right? So that's what the general public recognizes. So if we can get those people to actually come, all of us know someone, even like your city council representative, right? Literally bring those people to these conferences. That's what will transform the industry. We're already doing all of the things that need to do with the plumbing that are building out those railroad networks that need to happen from a payments perspective, or from a DeFi perspective, or from any of these different things. But that, I think, is the single most thing that you asked the question is what transformed the industry, and it's the inclusion of the industry that's outside of our $1 trillion crypto industry, right? It's the hundreds of trillions of dollars of everything that makes everything go round of the world today that needs to kind of peer in to see what it is that we're doing.
That's a great point. And being a member of the SDF board, I have to ask also, how do we work on financial inclusion, right? How do crypto help in terms of building more inclusion in terms of the financial services? Maybe you, Ada.
Sure, yeah, I'm glad to jump in. I think that the problems and opportunities that we've seen in emerging markets need to be solved locally, right? Like we've beat this drum for a while, and I think it continues to be true, but it's about putting tools in the hands of builders who can stand up services, who can connect with local communities, who can connect to local TradFi rails where needed, so that they can apply the technology right there, right where it's needed.
I think it's a lot about the underbanked and the unbanked, right? So as a banker myself, there's umpteen zillion rules that exist as it relates to what you need to do in order to give somebody a bank account, right? And that exists worldwide. So what I think is fascinating, obviously related to the crypto market, right, is that anybody can get a wallet, right? And so because of what exists in the marketplace today, you have the ability to transact value without having a bank account.
Yep.
Right? And so some of the things that we're working on as a bank today is providing the on-off ramps. It's the same kind of thing that that partnership with that MoneyGram has with Stellar in terms of providing on-off ramps all around the world. And MoneyGram is actually a customer of ours. So we work with them on these things as well. But I think those are probably the single most important thing, right? Especially from a politician perspective, that we can talk about is financial inclusion.
Yeah.
Right? Crypto is financial inclusion. It's how to do it responsibly that's important.
Yeah. John.
Yeah, I would say the points that were just made about access are incredibly important. Being able to extend the reach of these assets to investors, or not just, I shouldn't say investors, but users around the world. But investment actually is a really important part of the equation. It's one thing to be able to have the convenience of a payments mechanism or even a savings mechanism. To be able to gain access to an income-producing asset is key, and much, if not the majority of the world, does not have access to that, whether it's a retail application or even private markets. I'll speak from the perspective of a U.S. citizen. There are millions and millions of qualified accredited investors in the United States who don't invest in private markets. Why? They just don't know how to. They don't have access either physical access or access through education or through advisement. So we have a lot of different ways that we need to change the way the world is banked, the underbanked across the board. So great deal of credit to Danelle and her team with Stellar, the work that SDF is doing from the very largest institutions in the world all the way through to the leading edge of the developing worlds. It's a real testament to everything that you're doing, and we're glad to be here. So thank you for the opportunity.
Yeah.
I'm going to add one more thing on
yes,
financial
please.
inclusion.
Yeah.
And I think that we have a responsibility to go upstream and downstream. I think we've talked a lot about once value is on the blockchain, any blockchain, once it's a digital asset, then there's so much you can do with it, right? But where did that value come from? And so I see ecosystem partners like Bitwage, where if I can earn and get paid in a digital asset to start with, and then I can move it into a wallet that gives me the flexibility where I don't have to have a bank, or maybe I have a WireX account, then I can actually see the flow through where this is something that banks right now are not doing or cannot do. And that's where I see real opportunity for expanding the pie financially.
Absolutely. And again, coming from Brazil and having just been back from Mozambique and Kenya, you can see a lot of solutions that are trying to deploy possibilities for the unbanked, right? So it feels to me that when all these pieces are put together, especially with crypto, things can change really fast. So we're out of time. Please help me to thank our speakers. That was really great. Thank you so much.
Thank you.
Yeah.